Ladies and gentlemen, good morning, good afternoon, however this finds you. I wanted to take some time today to discuss these new Trump accounts. You may have already seen some or read some about them or seen the Super Bowl commercial for them a few weeks ago, but I just want to lay out a groundwork for, hey, what are these accounts? How do they function? And do they make sense for you? So let's get into it. Last year, the One Big Beautiful Bill Act was passed, creating these new Trump accounts. And specifically, I want to look at what happens in these accounts from the time a child's born until they're 18, and then what happens after they're 18 years old. So from the time a child is born until they're 18, you can only make contributions to these accounts. You cannot make any withdrawals before a child turns 18. Contributions are limited at $5,000 per year, which will likely increase and be indexed over time. You do not get any tax savings or tax deferral on these contributions, but the growth on the investments within the account are tax-free until there are withdrawals later down the road. I cannot emphasize this enough, but these accounts are designed for a child's eventual retirement. It's a big point. Within these accounts, you can also only invest in what is a qualified index. So you can invest in a U.S. market cap weighted fund, like an S&P 500 index fund, but until a child's 18 years old, you're going to be hindered on your investment options within the account. Doesn't mean they're bad investment options, but you certainly will be limited. Now, here's what's interesting. If you have a child that's born in 2025, 26, or 2027, then you can sign up to open a Trump account, and if you elect for it, the government will put in $1,000 into a Trump account for your child. Now, you have to sign up for it, and that can be done using Form 4547, and your child has to be born. You got to have a name, date of birth, social security number to be able to do that. But the government will contribute $1,000 to your child's Trump account if they're born in 25, 26, or 2027. And once a child's 18 years old, these accounts function fairly similar to IRAs at that point. So any withdrawals before age 59 and a half are going to have penalties. And your initial contributions will be withdrawn tax-free, but the growth on investments over time will be withdrawn, will be treated as ordinary income. So once again, functions similar to an IRA. Once a child's 18 years old, you are not limited on your investment options. You can invest in the same things that you can invest in an IRA with. But once again, these accounts are geared towards a child's retirement. So if you're looking at or considering saving up for education expenses or maybe your child's first down payment on a home eventually, this is not going to be the best account for that. One of the big overhanging questions that we don't have an answer to right now is, could you take a Trump account and eventually roll it over, convert it to a Roth IRA? That's just a question that we don't have answers to right now, but that would change how we view these accounts. Now, are these bad accounts? No, not at all. And truthfully, if you have a child who's born in 2025, 2026, 2027, I'd recommend signing up just simply because you would be able to receive $1,000 from the government in your child's Trump account. But once again, it's more than likely that depending on your goals for your children, that this will not be the first account that you'll want to make contributions to for your child's saving and growth down the road. Once again, that depends on everyone's individual situation, but the Trump accounts are geared for a child's eventual retirement.